Good morning from Los Angeles. It's Alissa, Coram, and Shreve here with your market update, reporting to you live from our newsroom. And on today's show, we're going to be talking about Chipotle, Match Group, and Twitter, all moving on their earnings. Maybe not all higher, but they are showing interesting chart action. So we're going to be taking a look at those. But first, we're going to be checking in with the major indexes. The NASDAQ is down about 0.5% off of the early intraday lows. So is the S&P 500 down about 0.5%. The Dow down about 0.3%. So second day in a row of losses, but modest losses so far.
So far, yeah. The S&P 500 snapped a 5-session win streak yesterday, and it is lower again today. Here again, we take a look at that 200-day moving average for the S&P 500, getting some early resistance as it tries to hold above the 2,700 level here. So, but losses pretty mild so far. Indexes off lows. Negative sentiment this morning. The European Commission lowered their growth forecast for the Eurozone down to 1.3% from 1.9% this year. So kind of reminder to people that the Eurozone economy is still a little skittish, but that's kind of fueling negative sentiment in the early going.
Okay, well, Chipotle shares extending gains in the early going today, now up over 14%. Heavy volume here. This comes after a breakout from a consolidation not too long ago. Earnings move here, a strong quarterly report. We have earnings up 28%, sales up 10%. So continuing accelerating growth on the top line here. So investors really liking the look of the Chipotle report.
Yeah, no question about it. It was a tough year for the stock in 2018. A lot of incidents of food poisoning. Company looks like it has put that behind it, and you got a new CEO in place here. Brian Nickel, who was chief executive at Taco Bell for 3 years. So he's been on the CEO post at Chipotle for a little less than a year, but he's very technology savvy, has the company focused on digital and delivery, kind of higher margin areas. And the numbers were just, really spectacular. Accelerating sales, better than expected same-store sales growth, strong digital sales up 66%. So stock is over 600 now. Very impressive move.
Yeah, what's not to like? Now the question will be, can Chipotle hold these gains throughout the session? We've seen a lot of high-octane breakouts lately that have come well off of that intraday high and closed at the bottom of the range for the day.
Yeah, we're going to take a look at Match Group in a second. That's an example of that. We had some gaps up yesterday on earnings where gains faded, but Chipotle holding a really bullish gain so far. But again, a lot of new going on at Chipotle, so looks like some institutional investors are in there buying the stock, so that's good.
Yeah, we do have some institutional buying for Match Group. Volume over 1,000% higher than normal. Shares up about 9.5%, but definitely at the bottom end of the intraday range for now, even though shares are gapping up, and we are still seeing the relative strength line at a new high. We saw better than expected earnings, but decelerating sales growth for the second straight quarter. Tinder doing well here. So what do you make of the action for Match Group today?
Well, I mean, obviously the street is optimistic about the company's earnings report. It crossed the $60 level. It has backed off highs. Still a solid percentage gain for Match. It gapped up over that 58.10 buy point from a cup-shaped base. This was kind of a flawed pattern to start with due to a pretty steep pullback on the left side when it corrected from $58 down to around 35, 36, something like that. So typically when a U-shaped base, a cup-shaped base like this forms, you want to see that, pull back right around the 30% area. That is what our research shows can really deliver the best breakouts. So Match Group corrected a little steep, but good breakout for the stock today.
All right, well, we'll be keeping an eye on that one and see where it closes today. And we also want to talk about Twitter, which which is down over 9% in heavy volume, gapping down after its quarterly report. It did turn in better than expected earnings, but rising costs here and a sluggish sales outlook. And the chart has really not looked that good, especially since we saw the big sell-off later last year, but even before that, it gapped down on a quarterly report a couple quarters ago.
Yeah, and a bearish session for the stock yesterday, where it reversed off highs and closed below its 200-day moving average. So I mean, it's just a classic example of a stock in a downtrend. And I think there were some people that were thinking that, in light of pretty good results from Facebook recently and Snap, that maybe the news might be pretty good at Twitter. And the numbers weren't bad, but the company talked about rising costs, rising expenses, and their revenue. Some thought their revenue outlook for Q1 was a little bit light. So stock getting hit pretty good. So an example, another good example of why it's kind of risky buying a stock that looks like it's on sale. Sometimes it's on sale for a reason due to questionable fundamentals.
Yeah, that's right. Want to be checking the chart and see what it's really telling you before you buy. That's why our looking at chart patterns and the cancel methodology is so important to follow.
Typically, looking at the leading stocks and leading industry groups is good. Is good strategy. You're just kind of looking at the quality merchandise, and it was a very rough 2018 for Twitter due to, again, questionable fundamentals. I think the company's earnings report this time around, obviously due to its price action today, didn't do much to clear anything up.
That's right. Well, definitely don't want to be buying a stock on sale here, especially with the gap down on earnings. But we will have more analysis for you at the close. Ken and I will be here, so make sure you are tuning in at 4 p.m. Eastern, 1 p.m. Pacific for our end-of-day analysis. And to be able to do that, make sure, if you haven't already, subscribe to our notifications across social media, from Facebook to Twitter and YouTube. If you're following and subscribing, that's how you will get alerts when we go live and be able to stay up to date with all the latest. Thanks for watching, and be sure to head to investors.com throughout the trading day for all the latest stock news and analysis. We'll see you later today.